Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. It is obviously, it's stating the obvious here as elsewhere in the grains that the market had moved sideways to lower from early July until mid-August. The problem here in Paris milling wheat compared to the other grain markets is that we had two competing patterns vying for the market's attention. First pattern was a July to September triangle come wedge pattern, pointing lower, enough to be considered a wedge but not completely out of the triangle class. This pattern saw a final break higher in late August. Then there's the second pattern, the late July to early September bear channel. This one looked better at the time. In practice, this discussion actually became immaterial as we've seen the market reach the primary and secondary targets for the triangle plus the target for the bull channel, and all had been exceeded. In this whole vying process, the market here has also constructed a new pattern. It built a mid-August to mid-October ascending wedge pattern, currently at 362 to 373. And then you see 3 weeks ago prices dropped out of this ascending wedge pattern and pushed down through both the medium moving average, currently 335, and the long moving average, currently 343. We just had the slowly rising short medium moving average, currently at 339, to hold up the market. This moving average was severely tested these last 3 weeks, but it has held. Indeed, the market is now above the declining medium moving average, and on occasion this week above the long moving average, and I will speak more on this week's action shortly. Anyway, these supportive actions leads to the same situation seen in the other wheat markets, where there are now two avenues for this movement of this market, though there will no doubt be more available eventually. The first is the straightforward move down with the appropriate potential targets for the ascending wedge pattern. Thus, a primary target X on the downside is in the 331 zone, whilst a secondary harder to reach target X1 is way down in the 296 zone. Then there is the second avenue. It is the possibility for the whole of the July to date action being not just a loose type of V bottom, but a loose type of V bottom with an extension. These extensions have something like a bull flag within them, and that is what I thought last week may have been building here since mid-August. Personally, it looked a little bit slack as a pattern, more like a bullish halfway hesitation, but it all depended on the short medium moving average still managing to hold the market up despite it being tested. If we then saw prices revert back up, well then this second scenario, the loose type of V bottom with an extension, suddenly looks a lot more interesting. So this brings me to this week's action, which started the week looking like it may well be the beginning of the start of the final leg of a bullish halfway hesitation, but then faded midweek to still look higher for the week, but not in a good way for the bulls. Almost an island top formation, though not quite. So what did we learn this week? Well, for the bulls, the short medium moving average still helps, though how long will it continue to do so under all this testing is beginning to be an open question. The addition of the medium moving average below will help, but I'm minded to treat that one with caution. For the bears, the market was effectively capped on Tuesday by the lower trend line of the broken ascending wedge pattern, which is under October's highs of 363.5 and 357.75, thus lower highs being a bearish indicator. Additionally, the failure of the market to stay above the rising long moving average is a further piece of bearish pressure. This brings me to my final piece of observation. Unlike the other grain markets, this one might, just might, be adding a fresh pattern organised from the recent action. Instead of a possible bullish halfway hesitation, maybe the action since the August low is turning into a double top type piece of action. I can only really see that here and not in the other grains, but it is worth mentioning, as by next week it may indeed become a possible third scenario. London UK feed wheat. From mid-July to the end of September, we had a shallowly bearish channel that morphed into a shallowly descending, broadening wedge pattern, which morphed again in mid-August into a bull channel, currently 296.30 to 315.30. 3 weeks ago, the market made a weekly key reversal down that broke down through the lower bull channel line and started the next major action, this time a move lower. Prices additionally broke down through the medium and long moving averages, currently 270 and 279.30. This despite the long moving average being in the wrong place if we compare it to the other grain markets. The short medium moving average, currently at 273.70, which also had fulfilled the role of a catcher's glove holding up the market, well, it failed to do so here and dropped the ball 2 weeks ago. To extend the metaphor, the 50% Fibonacci line, the July 21 to May 2022 move at 262.5, which I'd previously suggested might fulfill the role that the short medium moving average failed to do, well, that has sort of held up prices, but it wasn't without being tested. So, to quickly recap, the market has broken down through the lower bull channel line, leaving us, as elsewhere we've seen in other grain markets, with two avenues going forward. No doubt, more will become available eventually. The first avenue is a straightforward move down with potential targets for the break below the bull channel. That's a primary target on the downside was already achieved in the 269 zone, whilst the secondary higher than reach target X1 is way down below in the 239 zone. This leads to the second potential avenue, is the possibility for the whole of the July to date action being a possible V-bottom, but a V-bottom with an extension. These extensions have something like a bull flag within them, which I initially thought was being constructed here since mid-August. Personally, this looked a very tired and sick version of a bullish halfway hesitation here. So I said last week and I quote, "Take a big pinch of salt with that idea, but you never know." End of quote. Anyway, if this 50% Fibonacci line does hold up the market and we subsequently see prices revert back up, well, this second scenario, the possible V-bottom with an extension, will suddenly look a lot more interesting. Then came this week's action, which on Monday really looked like the market was moving to scenario 2, but then the rest of the week was spent in retracing lower, though still above last week's close. So what has this all taught us? Well, not much. We saw that Monday's move higher was predictably capped by the combination of the slowly rising long moving average and the old neckline of the March to June head and shoulders top, currently at 278.20. Meanwhile, the base was the broken upper trend line, currently at 266.80 of the old descending broadening wedge pattern. You see, the market didn't even make it down to the 50% Fibonacci line at 260.5. So what we have learned is that the expected areas of resistance overhead and I suppose support below are still good. But this week's actions have not helped or really hindered the two possible scenarios, though it has deformed the idea of a bullish halfway hesitation quite a bit. So I'd be especially cautious about that one as an idea going forward. One final point here that does not show up elsewhere in the grains really, and please read into this what you will, but we have a lagging indicator of a dead cross of the declining short moving average, currently 269.60, pushing down through the declining medium moving average. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.